Hey traders, welcome to Charts and Coffee for Friday, October 15. Great to see everybody. All right. Hope everyone's got their caffeinate and dominate. All right, so looking forward to the way in which this market is responding to some data. Earlier this morning. Again, we've talked about this from time to time in the Charts and Coffee show, where, if you can make a pit stop at Forex Factory or pick your favorite calendar, but you want to hone in on those high impact scheduled economic events, and right in here, your high heat hot zone of core retail sales. So we know that at 8:30 there's going to be a reaction. Now this is going to be specifically important for intraday traders, especially if you like to put trades on before the bell. But remember, there are always two reactions intraday, and one is the reaction of the initial 8:30. There we go. That was weird. All right. Are we good on audio and video? I think we are. All right, we're good on audio and video. Should be. All right. I'm assuming we are, unless the audio got weird. Okay, let me fix this. Give me 1 sec. I think we can do this on the fly. All right, how's that? Is that better? Should be better now. Yeah, the system just hiccuped on me a little bit. All right, let's see if it just kind of fixes itself here. Okay, much better. Awesome. All right. See, we can do this right on the fly. Don't you love live television? All right, so let's do this. So in terms of those economic events, remember, what we were mentioning is that there's two different ways that an 8:30 a.m. Eastern event is processed. One is currency traders, futures traders. They'll make a move with that 8:30 release, right, when the hot zone hits. But then at 9:30, an hour later, your equities group, your ETFs, now those folks are going to be able to have their opinion too. So look at the 8:30 reaction, and remember that might be sort of what echoes through into the 9:30 open. All right, so just something to keep aware of. 8:30 economic event mornings, they will react a little bit differently than the ones where we don't have the 8:30, or where we might have a 10 a.m. or a 2 p.m. Eastern type event. So keep an eye on that calendar. All right, so first question, looking at the NQ. Hey there, James. Sure. Let's jump on over there. Looking at the NQ, isn't this possibly a 1, 2, 3 continuation to the upside? So I've been getting, this was a question that I've been getting, and yeah, I love that you all are picking up on these 1, 2, 3s. These were some updates at the blog that Trish had done to walk you all through the pattern. So sure, really we have in some ways dueling 1, 2, 3s. We can argue that the 1, 2, 3 here was the initial reason for the move higher. And we could say there could be a little pattern in here that could be indicating movement higher. But this is what chop looks like. See that? This is what chop looks like. So you're right. We are getting the dueling patterns, but this is why chop in so many ways can be trickier. Here's what I'll say. Yeah, we might get a little bit of follow through this 50%, the halfway zone between the high and the low. But I would say your best bet is to continue to remember that this is support, right? Overall, within the context of chop, and this is resistance. And you're really looking for overbought and oversold zones on this in this chop, and sort of these areas right in the middle, which can be actually very tricky and very deceptive. We don't want to make a habit of engaging the market sort of in the middle. And this is quite literally the middle. It's the 50% of the range. So yes, but please be careful because it is chop. It is chop. And it's not as if this is fresh chop. This is chop that's been established since the middle of the month. So yes, they're both at work, which is not unusual for choppy markets. So this is where I'll say, and this is such a big part of the class coming up tomorrow. And for those of you that have registered, a couple things really quick. I'm going to walk you through in the class how to set up TradingView, because I've been getting a lot of questions about that, how to set up TradingView and how to scan and set alerts with TradingView, because I use TradingView a lot. It's the way in which I can make sure that I don't have to be glued to these particular setups all day, but rather, kind of live along the 1 hour a day type approach, which actually isn't about being lazy or saying, hey, you can just do this in 1 hour a day. I actually think your trading results are going to be better with a little less time to overthink, overtrade, overmanage. Less is more in a lot of ways when it comes to trading, but monitoring is sort of a constant process. We have technology now to do that. So we'll be going through that in the class. But then also I'll be giving you all the toss.ms links so that the layout that I use, which is actually on another screen here on my computer, my rig here, you will have the layout that I use for this. So what I would say is if you're looking at this is where we, and James, I know you know this because you're in the mastery, my friend. This is where I'm going to say, if we're going to rip higher, I'm going to look for shorts in XLC. I'm going to look for shorts within the group of IYZ, right? So when we have the layout, in front of us, and that's part of what I'll show you on Saturday, at least, how to scan the layouts. I mean, that's part of the overall way in which we manage these markets, right? So subtopic within this overall topic of communications, this is a dumpster fire. I would love to sell the rip here. Now, if you're in the options room, you remember that we got into KRE. If you're in the mastery, you know that we got into KRE. That's just the opposite, right? There's actually a really nice trade that we have going here now. We're going to open around 782 this morning, 70.82. This is now by the dip. So that question about NQ, James, this is a sector pickers market, right? I'm not going to go at that broad view, okay? That's what we want to remember. As far as a JT, I think we have the trade flags in the room. So KD, check out the room drive. So questions about some of the indicators that I make available to the mastery, check out the room drive in the chat room, and whatever we make available to members is in that room drive. All right. Good morning from Germany. Good morning. Is the November-December bull here a couple weeks early? I don't know that I would just relegate my trading to just the seasonal. And I get a lot of seasonal questions. Seasonals are fascinating. They're helpful. Clearly, they're interesting, but they are not crystal balls. And they are probably singularly the most abused type of analysis there is. Yes, there's that inclination for the Santa rally. There's definitely the inclination for the end of quarter, end of year window dressing. But if you debug and detrend, for example, the S&P, be really careful, right? This is a 5-year look back. I'm sorry, this is a 10-year look back on the S&P. Here's a 5-year look back on the S&P. So I don't know about the November-December bull being something that I would just hang my hat on, because here's where here's a really simple trick. One of my mentors taught me before, you know, when I discovered seasonals early on in my commodity trading career. I thought to myself, all right, now I've got the keys to the castle. Now I've figured, all right, this is the way the markets move year in and year out. And that's more true to things that we plant in the earth and grow, harvest, transport, store. Remember, seasonals are really born of grains, softs, meats. It's a really a commodities conversation. And over time, it's migrated to currencies, treasuries, indices, metals. Um, and so remember that most of the significant impact on indices specifically is going to come from the central banks first and likely earnings and the cumulative macroeconomic data, rate of change, right? Second, third, right? What we want to remember is, and this is going to be the really easy way to make sure that you're using seasonals accurately, is look at the date that you're focusing on the seasonal. Don't look forward because that's what we love to do, right? Oh, this is what the markets are going to do. Look backwards and ask yourself, have the seasonals been in line thus far? Therefore, can I trust them going forward? So this is where I'll say I love the topic, but it's not necessarily for me really a clear cut Santa rally starts in October kind of thing. October tends to be kind of ugly, right? So why are we moving higher in some corners of the market? Why are we moving lower in others? Because we're in a shifting macroeconomic environment. That's courtesy of the Federal Reserve. There are buy the dip opportunities. There are sell the rip opportunities. And that's why I'll say when the indices are in chop, this is what you must do. You must dial it into the individual sectors. By the way, if the sectors continue to chop, that's when we have to dial it down to the individual stocks. So notice it's really an incremental adjustment that we're making. And that's a lot of what we're going to be covering on Saturday. How do we make the adjustment if we continue in chop? How do we make the adjustment if we go back into an uptrend? Kind of to James' question. And how do we adjust if we do go into a downtrend? Where are we going to notice it? What tools are we going to look at? So thank you for the question. I appreciate that. AJ asked, I went short the XLB on Wednesday. Okay. Stopped out yesterday. Any advice on this trade? It looks like I got 1, 2, 3. I love that y'all are looking at the 1, 2, 3s. Yeah, we can definitely say there was a 1, 2, 3 in here. What I would say, AJ, is when we, and this is such a great topic because part of what I want to do again is if you're on, for example, Toss, if you're on TradingView, if you're on TradeStation, whatever platform you're on, one of the most important layouts that I use is this, right? And this is oh gosh, this is really the most basic but most underused approach. Sort of it's been my little secret for a really long time. And I say secret not to be cute. I say secret because sometimes it's the really basic stuff that we tend to overlook. If I'm going to look at an overall sector or index, I need to look within it. And if I don't see that the top weighted names, so here's your XLB, my friend, right in here, which is, wait, I agree with you. But this is happening in XLP, which is where I told my, the mastery, hey, be really careful because the top 2 weighted names are not in sync with that tide, the bigger boats, if you will. Here's your big boat. Here's your big boat. These are not in downtrends. This is where that JT multi is so powerful. And so when I notice that, those are things that are going to drive me to double red corners of the market. And there's actually very few double red in terms of the consistency of the individual stocks within XLB. And so, right, I don't believe that you put on a bad trade whatsoever. I mean, you got caught up in a rip. It happens. And that's how chop and downtrends, I think a lot of folks are going to realize, wow, downtrends are awesome. Downtrends are awesome, but they're very violent. And you're going to notice if you can start to dissect these things, and I just gave you sort of a cursory look at that. If you can start to dissect these things, you'll realize, oh, this is where this particular trade is vulnerable. So yeah, AJ, Good trade, but then go take a look at the multi and you'll see that it was vulnerable to it because of those heavily weighted stocks. This is high concentration. This is why ETFs are the best way to build watch lists, the best way to understand what's happening within a market, not at the broad index level and not down at the specific stock level, but right in the middle where you could pivot higher to the broader index or pivot lower to the shorter, to the individual stock. So nice setup. I would say keep an eye on XLV. Look, I might be looking at the same thing in XLI, right? So we'll definitely be keeping an eye on those rips. I'm with you there. All right, next question is Kevin. Oh, there we go. Happy Friday. Yes. Can I please take a look at a potential long in wheat around 7:15? All right. So two ways to play wheat. We can go straight up into the futures contract, or we can take a look at the WEAT ETF. ZW, the wheat futures contract, is sort of an interesting anomaly within grains, because if you take a look at beans, you take a look at corn, they're being hit pretty hard, and I'm pretty bearish ZC and ZS. Remember, you can trade corn via CORN ETF. You can trade beans via SOYB. So a lot of times there's some pretty cool ETF alternatives. So ZW, there's a narrative unique to it right now, Kevin, which is really, it's not a demand narrative. I think it's an issue with supply. And so, yeah, you can look at dips, but please remember, it's really more choppy. The structure always precedes strategy. Structures chop. So I'm really looking for where I have oversold support based on the structure of the market. And yes, we can absolutely be more bullish because a trend that preceded the chop was up. So that's going to have that influence. But be careful because, yeah, I guess we can look at the lower end of the wave. We can look at the 55. Just be careful because remember, your USDA crop progress reports, your USDA reports are going to be the bigger factor. And so it's just bucking the trend of grains. So what you've got is a relative outperformer. You sort of got the Tesla of tech right now. We know Tesla sort of bucking the trend in tech. So this is kind of wheat doing the same thing, where the group that it typically moves with is heading lower, but it's heading higher. And so you have to really keep an eye on the narrative specific to wheat. But it is potentially viable. I agree with you. 7:15. Here's a problem. It could even be down to 7. Which one of these levels is going to be oversold? Is it going to be the VWAP at 680 or 680, 685? So you see we have different sort of lows that could ultimately be the support. And that's where a slow stochastic, or that's where ready, aim, fire, and chop is going to be really powerful. Okay. Is Honeywell setting up for a short? We talked about Honeywell in a free video not all that long ago. And yes, great question, Melissa. Is this setting up for a potential short? There you go. Step 1, step 2. That's what I'm looking at. So yes, I would keep an eye on this area's resistance. Really, you've got resistance. And this is why, when we put these packages together, one of the things that we do is we ask ourselves what indicators are going to automate as much of the analysis as possible. Notice the Darvis gives us that nice zone right in there that we can fade. Right? This would be a zone that I would look at resistance as the entry for a short, for long puts. We do have the 200 propulsion in play. We'll keep an eye on that. But this is very much a market that, I'd be open to shorting. And then, I'm running out of time, but, partly then what do we do after that, Melissa? Then we ask ourselves, where is Honeywell within the sea of ETFs? Where is Honeywell within that passive investing universe? And does Honeywell have confirmation at the broader sector level? And what else within those sectors might look as good, if not better than Honeywell, to give us a better, thorough, more complete watch list? Remember, watch list building is the key. And ETFs give us those pre-curated groups of stocks that we know are going to have attention. and then we can start to fine tune how and where we want to be, long, short, whatnot from there. All right. Thanks as always for all the questions. Really looking forward to seeing everybody tomorrow for the class. Check it out, simplertrading.com/extract. All right, gang, be good to each other. I'll see you tomorrow or on Monday.